I'm Lauren T. Gage. Thank you for joining me. Today's learning is about central bank digital currencies, or CBDCs, and tokenization of assets. First, I want to mention the 2024 South Dakota State Legislature has House Bill 1199, which is an act to repeal certain provisions of the Uniform Commercial Code. I think this bill is in response to the UCC laws that were talked about in David Rogers Webb's book, The Great Taking. If you'd like to learn more about that, please see my video or search the Great Taking documentary. To me, it looks like this bill is made to make it so security entitlement holders are first in line with regards to rights to securities they hold, so the securities couldn't be taken, at least in the way that was explained in the Great Taking book. I think this is a step in the right direction against a possible great taking. Please let me know your thoughts about this South Dakota bill. Regarding CBDCs, I want to first bring your attention to an act that was mentioned in a great comment from one of you. It's H.R. 5403, CBDC Anti-Surveillance State Act, which states, "This bill prohibits a Federal Reserve Bank from offering products or services directly to an individual, maintaining an account on behalf of an individual, or issuing a central bank digital currency, i.e. a digital dollar, directly or indirectly to an individual. Further, the Board of Governors of the Federal Reserve System is prohibited from using a central bank digital currency to implement monetary policy or from issuing a central bank digital currency." If at this point you oppose CBDCs, please contact your local representative in support of H.R. 5403 and share this information to get the word out. You can find the links for these in the description below. Back to CBDCs. According to the Federal Reserve, in an article titled "Money and Payments, the U.S. Dollar in the Age of Digital Transformation" from January 2022, a CBDC is defined as a digital liability of the Federal Reserve that is widely available to the general public. While Americans have long held money predominantly in digital form, for example, in bank accounts recorded as computer entries on commercial bank ledgers, a CBDC would differ from existing digital money available to the general public because a CBDC would be a liability of the Federal Reserve, not of a commercial bank. This brings us back to that H.R. 5403. The Federal Reserve has some frequently asked questions on their page about CBDCs. I've linked to both the PDF and the facts in the description. As of March 2024, found on the Atlantic Council CBDC tracker, there are already 135 countries and currency unions exploring CBDC. According to the WEF, what's the difference between wholesale and retail CBDCs? A retail CBDC is a form of central bank digital currency that is used by the general public. A wholesale CBDC, on the other hand, is used among banks and other licensed financial institutions for interbank payments and securities transactions. After watching several videos and reading several articles online, I've compiled a list of the most commonly mentioned concerns that people have and what they think could happen with CBDCs. This doesn't mean this will happen, it's just what I've come across as people's main concerns. Let me know what your thoughts are about these in the comments. CBDCs can be programmed. So the worry here is that your specific currency could be programmed to not be allowed to be spent on certain items. There could be holding limits put in place so that there could be limitations on how much a person can have in an account. This brings us to another concern, where CBDCs could be programmed to have expiration dates and so expire in a certain amount of time or on a certain date if the CBDC isn't spent, making it impossible to save. The central banks could control freedoms by using a social score. For example, a concern was mentioned that certain medical procedures could be required for a person to be able to spend CBDC, or limits could be set on if, for example, someone has a carbon footprint, which was considered too large, if that person traveled more than was considered allowable. Negative interest rates were mentioned. This was in regard to using CBDCs to compel the use of money to stimulate the economy or decrease spending to slow the economy. Basically, it was being compared to direct control quantitative easing. The fact that CBDCs would be issued by a central bank versus a commercial bank was said to be less free, because with a commercial bank, if a person isn't happy, that person can switch banks. But with CBDCs, having all money controlled by the central bank, this freedom of being able to change would no longer be an option. Another concern was the lack of privacy being a major concern. This could be seen from previous examples given with a possible social score. Also, I came across the idea that if there were other goals from the government could limit the person's money supply if that person, say, supported a less popular stance, or I repeatedly found the example of if someone supports a presidential candidate that is less preferred over another, the donation to that campaign could be blocked, or the account could be blocked or frozen. How would this all be possible? What's being mentioned is FedNow. FedNow isn't a currency, but it is a platform that will transfer your dollar online. If you'd like to see if your bank is a participant of FedNow, you can go to the link in the description, and this is what it looks like, where you can see different banks that are participants in FedNow. Why would it matter if your bank is a participant in the FedNow program? What I found was that the concern here is that most people think there will be a noticeable exchange of our dollars into a digital central bank digital currency form. Instead, what I found is that a bigger concern is that the transition will actually be silent. Banks that are affiliated with FedNow could possibly silently transfer your fiat dollars to a CBDC, sparking the concern that the deposit or liability is no longer with the commercial bank the person banks with, but is now with the central bank, and the person wouldn't even really notice the difference. I think the problem that is being implied with this is that over time, this will end up in a full adoption of CBDCs without permission or an informed decision being made, and then in the next great crisis, if or when one happens, the central bank would have full control to do as they will and impose laws, limitations, confiscations, or whatever the case may be on everyone's currency. I went to the Bank for International Settlements, BIS website, and found more information about dematerialization, digitalization, and tokenization of assets. This really followed along with the information from David Rogers Webb's book, The Great Taking, in my opinion. From the BIS site, in Chapter 3 of the Annual Economic Report from 2023, titled Blueprint for the Future Monetary System, Improving the Old, Enabling the New, I'll quote, "Following dematerialization and digitalization, the key development is tokenization, the process of representing claims digitally on a programmable platform. This can be seen as the next logical step in digital record keeping and asset transfer. I personally don't want my house tokenized and then able to be frozen or taken with the click of a button, or, as the Great Taking book inferred, be used as collateral for someone else without my knowledge or permission when I actually think it's mine by being current on my payments or being completely paid off." The more I learn about CBDCs, the more I feel that this really needs to be stopped. I think it's Edward Griffin, who wrote The Creature from Jekyll Island, who is working on a movement called simply Stop It. The BIS article then went to discuss cryptocurrency. Crypto and decentralized finance, DeFi, have offered a glimpse of tokenization's promise, but crypto is a flawed system that cannot take on the mantle of the future of money. Not only is crypto self-referential with little contact with the real world, it also lacks the anchor of the trust in money provided by the central bank. I think it seems the BIS is not fond of cryptocurrency, and this article mentioned the collapse of cryptocurrency, which I hadn't heard of before. I've seen cryptocurrencies like Bitcoin and Ethereum going up and down, but not collapse. Have you seen cryptocurrency collapse? Please let me know if I'm reading this quote the wrong way or reading something into it or not. It says on the BIS website, the collapse of crypto and the faltering progress of other tokenization projects underline a key lesson. The success of tokenization rests on the foundation of trust provided by central bank money and its capacity to knit together key elements of the financial system. This capacity derives from the central bank's role at the core of the monetary system. Among its many functions, the central bank issues the economy's unit of account and ensures the finality of payments through settlement on its balance sheet. Building on the trust in central bank money, the private sector uses its creativity and ingenuity to serve customers. In particular, commercial banks issue deposits, the most common form of money held by the public, supported by regulation and supervision. This two-tiered structure preserves the singleness of money, the property that payments denominated in the sovereign unit of account will be settled at par, even if they use different forms of privately and publicly issued monies. Do you trust central bank money? Currency? Money? Please let me know in the comments. So when might we actually see CBDCs? According to an article on Wells Fargo's website titled Central Bank Digital Currencies and the Future of Money from October 19, 2023, how long may it take before the U.S. creates a CBDC? We suspect it will be some years before a U.S. CBDC is designed, approved, and used. Our best guess would be 3 to 5 years. The release of FedNow, a new fast payments program, not a blockchain-related technology, launched in July 2023. Might give us some clues on the timeline, though. The Fed formally started studying the potential of FedNow in September 2013, nearly 10 years before its release. While we are not expecting a CBDC release to take 10 years, we do believe it could be a few more years before a final design is reached. So please let me know in the comments your thoughts on the South Dakota Bill 1199, the Anti-Surveillance Act, H.R. 5403, and your thoughts on central bank digital currencies and the great taking and maybe even tokenization of assets. Have you researched this? Let me know your thoughts and what you think. If you find any errors in what I've mentioned or brought up, please let me know. I'm linking to the websites and articles, and anything I've referred to in this video are linked in the description. Thank you so much for spending time with me and for learning with me and following me along on this journey. Very glad you're here. Appreciate your comments and hope to see you next time.